Hi, welcome to Sell the Story with Clint and Ben. Today we have Taliesen Hollywood from Hanbeck M&A on our show. Tal's an M&A advisor, and he talks to us about why brand is the primary driver of exit value when you're trying to sell your e-com business. And he also explains why 2025 is the year of the buyer. So hold on to your business if you can. Keep growing your brand. And he describes the things that he wishes e-com owners knew before they come and talk to him. Okay, let's listen in. Hi, welcome to Sell the Story. I'm your host, Ben Watson, with Clint Armstrong, my co-host. And today we have someone all the way from London, Tal, who has quite a diverse career within mergers and acquisitions. And Tal, do you want to give a little bit about what you do and what got you here?
Yeah, thanks, Ben. Sure. So I'm the co-founder of Hanbeck, which is a M&A advisory firm in the consumer product space. What we do, corporate finance in the US is known more as investment banking. So we work with consumer product brands that are usually founder-owned. Occasionally we work with larger strategics. We had a publicly listed client that was selling portfolio of brands, and we helped them with that portfolio sale. But typically they're founder-owned businesses, typically startups that have grown to be really successful and ideal kind of acquisition targets. We help them along the way, actually, to become optimized and be saleable and the most valuable kind of asset that they can be. And then we help them to sell the business, protect their interests, and get them the best deal, basically. We also work on the buy side for acquirers who are looking to buy, consumer product brands and also businesses adjacent to the consumer product sector, everything from 3PL to packaging to, software for e-commerce, that kind of thing.
That's great. It's a very exciting place. I feel like that's where all the best sort of brands are coming through and really interesting stories.
Yeah, there's a lot of interesting brands for sure. A lot of interesting stories. I believe there's about 13 million e-commerce websites out there if you count all of the different.
Jeez.
Yeah, Shopify, WooCommerce, Magento, and everything. There's a lot.
That's huge.
Yeah.
But not surprising when you put the number down. That's significant.
Yeah.
I guess ease of access of. Sorry, Tal.
No, just a huge part of the economy. It's a way a lot of people make their living. It's pretty. Yeah, it's cool.
Yeah, and augmenting their living too. Side hustles just. Right, but the tools available now to make it to sort of start your own business, the barriers are a lot lower.
Yeah.
Hey, so 9 Bar Commerce, we like to start with the coffee.
Okay.
What are you drinking today?
This is going to be embarrassing. Australians are known as coffee snobs, and I've let my country be.
I don't know how accurate that is.
It's not noticed it at all.
This is just a kind of the equivalent of Nespresso that I made myself 5 minutes ago. Yeah, it's not very impressive.
I love it. Well, also Australian.
At least you have an espresso cup.
I made my own espresso.
That's the Australian way. There you go.
Yes, so I've got a machine downstairs, ground the beans. It's ristretto, actually, my version of ristretto. So It's very tasty.
For the audience, this is what I mean by coffee snob.
Yeah. Yeah. No.
One of the things I didn't know I was getting into when we went into business together, but very quickly found out after the fact when I told him that I typically drank day-old coffee that I put in the fridge and then put ice on it. It's the same old every single time I say it, but you know what? It's delicious. I don't care what you say about it.
Oh, I want to see the big gulp. I want to see the.
Yeah.
I got up. I was up super early this morning, and so I took it. I drank it before 6:30.
Already?
So,
Oh my goodness.
Oh yeah. Can't you tell? Like
Jesus.
With it today.
Oh, man.
It'll have a caffeine hit anyway. It'll give you the desired effect. So.
Yeah. That's right. Tal, Clint and I talk about this a lot, but creating differentiated brands aren't easy. It's quite a high bar to aim for. There's a lot to ask for anyone. In your line of work, how important is it that these businesses have a brand that stands out?
Honestly, without exaggeration, it's basically everything. It's you either have a really good brand or you don't. And for us, like, we're not at the brokerage kind of level. For us, typically the clients we have are within the kind of 2 million to 10 million EBITDA range. A couple are a bit above that, occasionally below that, but that's the core range. And to get into that level, it's obviously impressive to build a business that level. Usually they've done it fairly quickly and so on. But there are a number of ways that you can do that without building a good brand. And if you do, if you do that and you don't have a very strong brand, have a good business, but you pretty much can't sell it. So it's you can't sell it for very much money, not much more than you're making in for your annual profits. Whereas if you do, it opens up a whole conversation around it opens up the whole M&A opportunity for you, because you have built something that the acquirer can't easily do on their own. They have to buy it. So it's critical.
That's huge, right?
Yeah, it's everything.
Declan.
It's one of the, it's also very subjective, right? And it's an ephemeral thing. It's difficult to define, but you know when you see it, and it's the main thing we're looking for when we're looking for clients. Clients are coming to us. It's the most important thing. There's some other things that are involved. That everyone understands: profitability, growth, scale, how big you are, defensibility, different trends that are happening in different parts of your business. But they're all fairly easy to understand. Actually, to be honest, I think some people understand a lot of people, particularly in the consumer product space, they do understand what good branding is and what having a valuable brand is. Really difficult to execute, but you know it when you see it. And that's the main thing that we're looking for when people come to us. Like, it's the main thing, like, what is this brand like? Yes.
Yeah, that makes sense. I have to admit, I'm a little bit shocked on that answer. It makes a lot of sense, and it makes sense to us. But as we were talking kind of prior to this conversation, Ben and I thought it was going to be more on the economic side. But it very much is interesting to hear you say that it's essentially everything, which is kind of what we've been trying to communicate, or what we do communicate to those brands that we work with. So it's fantastic.
It's just the truth. Otherwise, you could ultimately you have a utility that, if you don't have a very strong brand, you have a system for making profits, and you can demonstrate, if you have good defensibility around it, because branding actually gives you a lot of defensibility in itself. Yeah. But there are some other ways, like intellectual property and some other things you can do to improve your defensibility. And you just have a machine that makes money, and you can model out how long into the future it will continue to make money for. And at a smaller scale, and that is a worthwhile achievement. Being able to do that is really great. And at a smaller scale, you can find buyers for those businesses that are willing to, investors that are paying $100,000, $200,000, $500,000, $1 million, sometimes up to $2 million or $3 million, that are individual investors, or they're experienced e-commerce people that are willing to invest that much, and maybe 4 or 5 at the most, with an aspiration in the United States, because they have confidence that they can take the business to the next level in some way or another, and they have reasonable confidence in the continuing cash flows, and they just pay simply a multiple of those cash flows. But they could re-engineer that and do it themselves, and they, in most cases, not with no disrespect to any of those businesses, like it's a really great achievement to be able to build a business like that and sell it. But what I'm saying is that it becomes a lot less reliable that you can find a buyer for a business like that at this smaller level without having real brand equity, because of the fact that the buyer has this buy versus build opportunity. Like, why don't I just add on this product line to my own? If you have patents around it, that can provide some defensibility. Sure, they might be able to do your exact product, but they might identify that there's other opportunities that they can acquire for less, and it just limits your exit opportunity, really. And then in the scale that we work with at the kind of investment banking size, where it's 2 million EBITDA and above, really, no one's interested unless you have a good brand. They're just those same types of simple investment decisions of, like, this is simply a machine that's going to make money for the next few years. Broadly speaking, those deals don't happen at the kind of 10, 20, 30, $40 million level. People are buying a brand at that level, and up to 100 million and beyond.
Yeah, and I think the businesses doing the acquiring, quite often they're really good at logistics. Operationally, they're very strong. That's the easy part, Whereas for a smaller sort of business just starting out, that's the things you sort of need to balance and work out and manage cash flow. And it can be really difficult. Like, you can see businesses fail because they don't get that right. Yet the building the brand piece, there's a gestation period. It's such a personal thing to the founder quite often, but it's also not just them, it's their relationship with the consumer,
with
their audience. It has to
Yeah.
develop over time. And I think we agree with everything you just said. And it's that dynamic of that consumer, customer, founder relationship dynamic that forms the brand.
Yeah, exactly. And I'm not a branding expert either, like you guys, obviously. I'm just an M&A guy, but it's so important to what we do that we have to understand it a bit. And so I don't claim to have anywhere near the like level of expertise that you guys have, but we kind of know it when we see it. We have ways of looking for it. And you mentioned the audience, or we sometimes look for like a tribe or a following around a brand, because that is a really strong indicator that they have something here that you can't just kind of engineer on your own. Once they have a really good following, and I think you're right. You see the brand sometimes evolving, or the story that the founder tells us when we meet them, like how the brand has evolved over time, led by actually the people who are buying the products.
That's hard for founders
really
too. Some of them don't want to let it change. Like they have this image, and quite often they're the businesses that don't evolve, don't become larger. We've got a really great client at the moment. Actually, she's launching next year, and a big part of working with her is building an audience pre-launch where these people are passionate about the mission she's on and are willing to put in pre-orders. And for us, we're okay to get 1,000 people telling us no, I don't like this brand, because we only want those 100 people who would really love the concept and buy into it heavily, because they're the people we want to take on the journey over time.
Right.
Anyway, it's a fun.
That makes a lot of sense. And then you build something that they absolutely love, and then that they can't stop talking about and tell other people. And the other 1,000 people don't matter, because these guys are going to convince 100,000 people. I
use this coffee shop analogy where the good coffee shops, people who are coffee snobs, the Australians and Kiwis, they go in there early, and everyone else is like, oh, it must be good coffee, I'm going to go there. It's
a bit like that. Kind of a way.
It's the same thing. Got to bring it back to coffee.
Yes,
of course. The one of the ongoing conversations that Ben and I have, and we've been having for probably at least a year, is why we really haven't seen any breakout brands come from these massive conglomerates like a P&G or a Unilever or, you name it. And we've come to the conclusion, and it sounds like you have as well, is that it very much is, it takes a lot of time to build that brand, to build that differentiator, which is then why a lot of the P&Gs and Unilevers and whoever's of the world then go and buy these other brands that may be eating their lunch on the retail shelf or on Amazon or wherever it is. Dude Wipes, Squatch, Liquid Death, like all of these Poppy, like all of these brands that have these multi-billion-dollar acquisitions or multi-hundred-million-dollar acquisitions. They have something. And so it very much is, we think that's what it is. And it's too expensive, and it's too time consuming, and those conglomerates are too conservative to be able to build that. They don't necessarily have the passion for the product to connect with that audience, take the 2, 4, 5 years it takes to build it. They have to answer their stockholders, and you can't have this massive outpouring of money without a result. So it's been something that we've been talking about, and we're very much narrowing down on that as the reason, but it definitely is ongoing. So hearing that come from you as well is
cool.
Just adding on to.
When we were chatting before, I could tell it was going to be a good fit, because I could see like we're going to agree on a lot of stuff. Look, and you can do it at a smaller scale as well. I mean, Poppy recently you mentioned like, that's $2 billion acquisition. To get to that scale, to do a lot of things right and have a lot of luck as well. But just like double down and continue growing and growing and growing. Like not everyone wants to grow to like a level where you can sell 2 billion, but we've had clients that are, significantly, much smaller than that, in the single digit billions, and have a real following behind the brand, and, people that really, really believe in and it can vary depending on what category you're in as well. Where it's consumables, it's going to be quite often the relationship with the brand will be fairly strong. Like you have a lot of trust because you continue buying the same product again and again. in durables, often it's like they'll have faith that the next product you create is going to have the same ethos behind it or the same quality or behind it as the previous one. And we've seen that even in durables, where people actually have like a real kind of tribe, even at a small scale. Yeah.
Wow,
the small team.
That's the power of the brand right there. That trust from your tribe that you're going to come through with the next breakthrough product for them.
Yeah, or that like at the smallest one that I've seen at that scale, where they have a real kind of what we think is a real following and have some brand equity there, was about 6 million top line sales. And they're in consumer durables. I can't really say which one it is, but one of the ones on the deals that we've closed on our website, but they were a really good quality of, there's a consumer durables, really good quality products in this, and had a following of people who were just passionate enthusiasts around this type of product. And each time we launch a new one, it's without disclosing too much, like that, they would launch a baby carrier, for example, and their brand, like you can buy baby carriers from a lot of different places. The particular tribe that they had following their brand and the ethos around their brand meant that they were going to trust the baby carrier brand makes. And that's a big thing. Like,
I've had personally the same thing with kids' biking equipment. Once you trust a brand in one part of that category, it's very easy just to look for what else do they sell, even if it's a little bit further up. But no, it's a real, that's a perfect practical explanation of brands. I think that's the easiest way to think about it. And lovely you said that.
Okay.
Can I ask, do you have any favorite breakthrough brands at the moment? Brands that are sort of out there that you've really like, wow, I'd love to work with them, or you are working with them?
Yeah. God, they're all big. You're like, I should have prepared for that question. But no, it's fine. I think like one that immediately comes to mind is Pigs. I really have always admired what they do in the US with the medical clothing, like uniforms and stuff. It might not be obvious, but that wasn't really an area where you could differentiate very well in the past. And they just through brand and quality, they did and built a really big business. It continues to be strongly profitable and continue to grow. And they keep making, in my view, like smart moves. And they're not looking to sell. They're publicly traded already. But that's an example of someone I think who did it really well.
One of those categories too that isn't sexy. It's not fashionable.
Not at all.
No, it's just regular supply. Yeah,
like medical.
Right. Yeah, exactly.
Yeah, but they made it kind of. I don't want to speak for like their description of it. I don't even know how they would describe their brand, but they made it kind of aspirational, I think, and did a really good job of it. Yeah,
that's great. Yeah, a lot of my my friends from when I grew up are now doctors, and they all wear the green scrubs and just like all the time. One, they're comfy, but two, they have to. And for them, it's always been something that a hospital provided, or something that got dirty and they just tossed it in a hamper and didn't have to worry about it. But I think that it's it's one of those pieces of equipment that nobody ever gave consideration to. And as soon as you started bringing out the variation and the different colors and kind of that customization, all of a sudden it was massive. And hearing them talk about scrubs that they wear now is very different than what it would have been 4 or 5 years ago. So it's just how that differentiation, that customization for a brand is something that will then move the market. And it's surprising when it's, a piece of equipment that has been the same for essentially ever.
Yeah.
And now you've got this and it's absolutely blown up. It's fantastic.
Yeah, it is pretty cool. I think it just would have been, to me, it just strikes as something that they've achieved that's actually quite difficult to pull off. And they did it. Yeah, it's cool.
Agreed.
Hey, Tal, how do clients find you, or how do you find clients? Like, what's the pitching process?
Mostly inbound, actually. We're lucky that most clients come to us by referral, or they just find our website or whatever. Kind of, it's a relatively small space, like the consumer products. You could say, well, even you could call it e-commerce, I guess. But e-commerce and retail, it's a fairly small space, and there's not that many investment banks that are dedicated to this. So they usually find us if they're the right kind of scale for us. Although always happy to hear from more, of course, if they
we'll do our best.
Yeah. not like we're the most well-known name in the world. I'm not saying that our brand is. We could probably do a lot of work on our own brand, to be honest. But we don't really do a lot of marketing. We probably should do more. Thankfully, we're in a good position where people do tend to just find us. We actually have started doing a little bit of outreach actually as well, which is a difficult process for us because we just only considering the e-commerce ones, like I said earlier, there's like 13 million of them. It's a filtering process, and the most important stage of the filtering is the brand, and that would be a very manual process to go to find. And so we're working on ways to identify like companies that meet the right threshold and have the potential to potentially sell in the future, and then reach out to them. It's not the easiest thing in the world to do on an outbound level for us, but we're working on it. Yeah.
I saw that you have the valuation calculator on your website. I'm sure that's probably a really kind of inbound for you, is just brands coming in, putting in their information, then figuring out kind of where they're at just from your perspective. And so I went through that and tossed in some just made up numbers. It's really interesting to kind of go through the process and look at what or how you're then likely evaluating those companies on the back end. So I thought that was really interesting. And so anybody who's listening to this, you can go to Tal's site, and we'll put the link in the description and take a look at what you think your value or what they think your evaluation is for your brand. So it's something that, again, it's added value, and it's just a piece in their cap, but also from your end, inbound client that you'll potentially work with. So that's great.
Yeah, that's true. And there's so much that goes into valuation and saleability. And one of the things that you can't put in there is like brand. We have this one question of like, how good is your brand? It's just like, but I think people understand there's only so much you can do with an automated. It's like a chatbot effectively kind of form. And we do what we can in order to give some value to the person who filled it in. So you get a valuation range, and you get also some kind of commentary based on the answers. Like, if you're majority Amazon and you don't have the potential really to expand into a multi-channel brand, it's going to hurt your valuation, and it'll automatically give you some comments like that. So that we can give some value to everyone who uses it, but really to have a really good understanding of like the valuation and salability of your brand, you need to talk to someone and have them look right into it in a lot of detail. But it's difficult to do that at scale. So that's why it's helpful to have that.
And you said you work on both the buy side and the sell side as well. I guess obviously the marketplace fluctuates, year over year, month over month, and probably has over the past, 9 months or so since things have changed here in the US. Like, where do you see kind of that ebb and flow right now? Is it more on the buy side, or is it more on the sell side? Well, it's kind of like real estate. It really reminds me of real estate. It's like buyer's market and the seller's market. So
there are some parallels. Yeah, it's and I guess we're recording this in September 25, and we've had a couple of years now where it's actually been very quiet on the sell side. It's much more of a buyer's market.
Interesting.
Yeah, for someone who's going to engage us to help them to find the right business, they're not always just looking for an absolute steal. They're usually looking for something quite specific, and they're helping us to identify that for them, and then to protect their interests in the deal, to make sure that the business is it stacks up commercially before they buy it effectively. But having said that, it's a much better market at the moment to be a buyer than it is to be a seller. People who are building those really great brands at the moment, we're helping them, giving them advice, but in most cases, unless there's something in their personal circumstances that's driving them to just want to sell, which is sometimes happens. If there's nothing where they really want to sell and really kind of need to sell this year, we're actually advising most people who are building these great brands to just keep building them, and we'll advise them when the market improves, which will hopefully be next year, mid to late next year. We think more capital will be coming into the corporate, more capital will be released, and the market will improve finally. Yeah.
When do brands typically engage with you? Like, what is there like you just said somebody's looking to sell, or they've got something going on in their personal life. Are there like a number of reasons that you've seen just people want to sell their business, or they reach out to you, and I guess where is that in their life journey? Because again, you just said that some of the times it's like, just hold off a little bit. We'll help you optimize your business. We'll get that get that EBITDA number, higher for you potentially. And I'm not trying to put words in your mouth, but that's what I'm assuming that you're trying to do.
Like,
Yeah. So like, where in their journey do they typically reach out, and why do they typically reach out to you?
there's usually some personal inflection point that is driving them to do it. And bearing in mind, in the consumer, with these consumer product businesses in particular, they have inventory, right? They have this big working capital requirement, and as they're growing, that working capital requirement is getting bigger and bigger and bigger. So they're making profits on paper, but pumping most of those profits back into the business, usually for a few years. And by the time they're starting to think about sale at a level that where we work with it, they can be making, $5 or $10 million a year, maybe a bit. Let's say if they're somewhere between $2 and $5 million in profit, and their personal circumstances really haven't changed at all. They're still driving the same old car, they're living in the same apartment, and they're making on paper millions and millions of dollars, but they've been reinvesting it all into inventory, and they've been working like crazy. And because they're usually not slow growth companies to get to that point, it's usually like exploded. And so being able to cash out is life-changing money for the people that we work with. Usually founder-owned companies, it's usually the first big life-changing event that they have. And if all things being equal, you want to optimize it, you want to maximize it where you can. But life happens as well, and that exhaustion factor is a big one for a lot of our clients. Just like, look, I know that I could make this business twice as big next year and get a lot more money and so on, but if I sell now, I've got enough money. It's enough. And next year, I might have a heart attack. So there's that. Other stuff can happen as well. Just, every random event that can happen in someone's life, from, divorce to family stuff to just other priorities sometimes come up. And the desire to take a $10 or $20 million asset and try and turn it into a $200 million asset starts to wane. That happens. Then there's also another big factor for us is, and every entrepreneur sees this a little bit differently, but some of them have the humility to just say to us straight up, like, I know how to get the business to this level, but to get this, and let's say it's doing 20 million in revenue, and I kind of know what it needs to get to 100 million. I know theoretically, but I've never done that before, and that's going to require an entirely different team. My job's going to change altogether. And I don't really know how to do that. And I have a go, but I've got more confidence that someone else is going to be able to do that better than me. So now it feels like a good inflection point to sell. That sometimes happens as well.
I think that takes a very self-aware owner to be able to say that, because so many times it's their child essentially, where, they've built it, they've raised it, and it's hard to say, I can't quite do this. But I mean, obviously more power to them if that's the case, because it's so many times the case where you get to a point and then you just try and do more and more and more and more, and you're the friction that is causing that. And so if they're able to do that, then good on them, because it's being that self-aware is amazing.
It is. It is. And everyone's different. Sometimes it's a co-founder telling them and they're resisting it or whatever. And every situation is different, but there's always some kind of inflection point. From the buyer's point of view, especially for newer people to, there's all the different buyers in this space. So some of them are very experienced, all the big strategic, we were talking about Unilever and Procter & Gamble and stuff. These people, they don't ask these questions, they've seen it all. A lot of the experienced consumer private equity guys, they don't. But there are a lot of buyers in the space as well who are, independent sponsors and search funds and so on, who are sophisticated, well-educated people with access to capital who are looking to make investments or do a roll-up in this sector or whatever, but they're still kind of new to it. Now, those guys very often ask the question like, why is this person selling this business in every case? Because they're usually, if they're coming to us and they're looking at the kind of business they could sell for that kind of level, the business is crushing it, and they're always having their best year ever, because they're supposed to be, they're going up. Why would you sell this business? And they need a good answer to that question. And so that's a big part of our job as well, to help communicate that. And for us to understand it as well, we have to really understand why the person wants to sell.
Becomes very personal at that point too. And I'm sure some founders are reluctant to share some of those details. I mean, for you, Tal, it's almost like you need to really get to know them on a different level. It's which honestly, when you think about M&A, you don't think about the personal side of it. You just think about numbers. But that's a really interesting insight.
not just the financial thing.
Yeah.
It's a very, you have to really know them, and you have to know what their priorities are and what's driving them, so that you can like actually act on their behalf, you know, and help them to get what they actually want, which sometimes is the most money, and sometimes it's not. Like sometimes it's the most speed or something else. Like,
Yeah, that's amazing. Can I ask, when sort of businesses come to you or you start engagement with them, is there something that you wish they knew or something that they'd done, you know, that would make the whole process easier? And maybe it's what we just discussed, you know, being totally transparent and just trusting that you are going to act in their best interest.
That's a good question. Yeah. It's difficult to draw a line and where it like draw a common thread through all of them. Usually they have all grown really fast, which means you know, from fast to extremely fast, somewhere along that continuum, and different things will break in different cases when you're moving so fast. So, and you can't wish for like a perfect scenario really, because there's always going to be some stuff. Often it's around team, like they quite often haven't had the time to hire the size of team that you would normally expect at the level they've now suddenly grown to. The founders are doing too much and they don't even have time to find the right people. And if they do find the right people, there are no internal systems quite often. You know, no one's really tracking KPIs. No one really knows what and everyone's just kind of been all hands on deck. And all of a sudden they're at this much higher level where everyone's expecting them to have a totally different org structure. And so that's a common one. It's difficult to really do much about that. We have to help them through that if we get to work with them early enough before, we can kind of give them advice about that and they could work on it. But it's just something that they just have to work on. It's just getting financials in place actually is I think everyone understands it. You need good, clear monthly financials. But it still isn't executed consistently very well, quite often. And just from my point of view, there's a couple of software tools there that have come out to try and simplify this, which in my view, I don't want to name names, but they, at least where we are in 2025, some of those software tools should have been in private beta, not launched. Jeez. They're so buggy that they're actually causing more problems than they're solving. And I think that their intention is to using AI and different, everyone mentions AI, but whatever.
So true.
Using software to solve some of the difficult problems around inventory management and so on in e-commerce accounting. I think once they can achieve what they intend, it'll be amazing. They'll be amazing. But in the meantime, I would be skeptical of using brand new software or even recently developed software in this space, because it can mess up your accounting badly. Which doesn't matter if you're not selling, but if you are selling, it can cause a huge problem. So but simply having good, clean bookkeeping from guys that understand consumer products and the inventory flows and so on, that's really, really, really helpful.
Well, it's funny you mention AI within inventory management, because when I worked at L'Oreal for a period of time, and we worked with the inventory team on a regular basis, and we were managing the media on Amazon at that point. And the best meetings were the ones where it was us giving our input, inventory giving theirs on, pipeline and any sort of challenges or opportunities. And then also, brand and marketing inputting as well. And it's the type of thing that it's not really something AI can do, because the knowledge of how a particular product, in one sort of SKU or ASIN is performing can't be really interpreted by a machine. You've got to know the flow of the business and how it works within that market space and what you're anticipating based on how you invested against it previously. So it's a really difficult thing, but but massive implications on profitability, right? If you don't get it right. So I
agree. Yeah,
AI sounds like the right solution, to everything right now. And we've got a bit of a mantra like humans before machines, and I think you've got to find the space where it makes sense. It just isn't a blanket solution.
Yes. Yeah. Exactly. Yeah. Absolutely. I think it can be incredibly valuable used in the right way, and we're finding more and more use cases, and then it every month or so it seems to improve, and then you can use it for other things. But trying to over engineer stuff to solve problems too simply with it doesn't seem to work very well.
I agree on that.
Yeah. It's a great tool, and if you can use the tool, then you're in definitely a good spot. But
Yeah.
if the tool isn't, it's like, using the wrong type of screwdriver. It's never going to work.
Yeah.
But it's really interesting to see everything that is coming out from an AI perspective. Like you said earlier, AI is part of every single conversation that's out there. You've seen massive corporations lay off. I think Oracle said they were laid off like 4,000 people because they had AI. And maybe I'm misquoting, maybe it wasn't Oracle, but at the same time, laying off, a massive number of people because they've simplified a process or they've created a new process that uses an AI or an AI agent, and all of a sudden, those people are without jobs. And so it's definitely changing all of the markets out there very quickly.
Yeah, I agree.
Scary. Hey, Tal, we've really enjoyed having you on, and thanks for everything. This has been a great chat. Typically, Clint asks this question, so I'll let him go for it. But
you good?
Perfect. So, obviously, how our podcast started out was around pitching and understanding how to pitch. And obviously, we gave you our history where we've been in large holding companies, we've been in a lot of pitches. Typically, something always goes sideways. And it's those stories that you share when you're at the bar, but we'd like to bring those out, just talk about them, just because sometimes they are so incredibly funny. So the question is, do you have a funny pitch story that you could share with us? A client that went sideways or something to that effect?
We've had some crazy stuff happen in e-commerce. You wouldn't believe. Clients getting, one deal fell apart with a situation with a felony, and another one turned out to.
We had one where a guest won a pitch in an agency setting, and before they sort of signed the deal, he said to the client, "Look, make sure you don't get hit by a bus tomorrow." And the client went out and got hit by a bus and didn't die, but it was smells of like, wow. Oh my God, Seb, what have you done?
Yeah. Wow. Here we go. What is next?
Right.
It's a hard one. It's a hard one to top for sure.
So yeah, these things happen, right? It's just part of pitching. Raw human.
Yeah, no, exactly. I'm sorry that I can't think of anything good for our pitch.
No problem. That's fine.
Yeah, no worries, not at all.
Give us your sign off, Tal, and we'll and your business name, and we'll obviously put all your socials in the YouTube links, and YouTube posting links. I sound like
cool.
the
display.
But
description down in the description. There you go.
Sorry, Tal. Give us your sign off, and we'll close out.
No, I actually don't have a sign sign off. But you can tell we're not really very salesy. But the company is Hahnbeck, Hahnbeck. So that's at Hanbeck.com.
Okay. Well, thanks again. Fascinating part of the industry, right, Clint? This
I love it.
Look.
Yes. Great to talk to you guys.
Really enjoyed it. Thanks, Tal.
Yeah. Great conversation. Really appreciate it. Thank you.
Thanks, Ben. Thanks, Clint.